All right, guys, welcome back to the channel. As I film this right now, Bitcoin is on a significant drop. However, we do have the 106,500 level, which hopefully by the end of this video, it's able to hold as it broke through it yesterday. This was on the back of what I was concerned with, which was actually far more important for the sake of the market, the sake of investing, than the war. There was no interest in Bitcoin. We followed that with the indicators and our crypto data that I'll get to in just a sec. So firstly, hit the like, subscribe to the channel if you are new here. Each of the day's analysis builds upon the previous day. It is your home of macro cycle analysis. So I've got heaps to get through, of course, Bitcoin, altcoins, traditional markets, including silver and gold, which have also been holding up relatively well, along with the economy, because this week we have the interest rate announcements coming up. But just as a recap, yesterday and the outfit non-change is Bitcoin. The things that I was concerned with was that there was a lack of interest. And if there was going to be interest, we would want to see a bounce for all the positive reasons where we'd see prices increase. So what I'm talking about here is the Google Trends, crypto and Bitcoin. We did see a bounce for BTC, and in terms of crypto, that really didn't go anywhere. At 18, it jumped up to 19. So pretty well flat here for the last few days. But for Bitcoin, on the other hand, 39, 39, 45. So a nice move there, and I suspect that was off the back of the breakout and the retest. So somewhere around that time frame there. That's why this 106,500, $106,500 level has been so critical for the short term. Now, of course, longer term, when you zoom out further than a daily or a 1 hour chart, which that's the game that I'm playing, much longer term, it's basically been a trading range here from the 23rd down to the 6th of June. And again, you could probably take it back another few days to the 13th, where the range has basically been between $100K and $112,000. So although in the last few hours, the price dropping here from 109 to 106, 106.8 at this point, and dare I say it, maybe we do go through 106,500, is a concern in the short term. I think we've still got further to go on the upside when it comes to the longer term, which I'll get to in just a moment. So let's finish up with the crypto data here, looking at the search volume over the 90 days. We did see an uptick here for BTC. That's the 90 days. And that particular data will start to show through if it is sustained over the coming days through the 12-month and then the 5-year eventually. But you can see here over the last day, that hasn't been enough yet to push that Bitcoin search volume higher again. The positives, though, are we are beginning to see the liquidations rise. So there was a fair bit of interest in that move higher past 106,500 for BTC. That got the shorts wrecked, and now we're in the process of getting the longs wrecked. Let's go down to the daily liquidations. Here it is right here. So something above $250 million is a bit better than average, and that's essentially what I like to see. For sustained moves in the market, you're going to see some sort of turning points when it comes to very significant days, like we see with $750 million, $1 billion, or even more. But the other days that are around that average point, that's where you start to see a little bit of interest from just the everyday traders keeping the market alive, essentially. And we saw it here as well. So it's all happening. It's coming together. It's just taking more time. What this one is your daily exchange volume. You want to see this going up, basically more interest coming into the market. And that's what we've seen over the last few days. We've got a slightly higher low forming at the moment. But again, we need to see the average volume come above 53, 54, and around 64 billion, which was that high on the 14th of May. So it's coming together. It's just taking a little bit more time than I think the majority would like to think. So the fear and greed reading has come in today slightly higher than yesterday. We did have a close above 106,500. So that's at the time as I'm filming this. So that's one positive, but still, I think it's going to need more time as it grinds into tightening trading channels. Now, the theory that we've been following in regards to the market sentiment is that we have time for the downside in market sentiment, no matter what people believe is happening or going on. The charts always tell the cleaner story, and it's happened yet again. We've got another 2-week correction in the sentiment. So that was the peak there in extreme greed. It dropped down into fear, and that fear was on Trump and Musk talking on X. That was this bar right here. And an interesting fact, yes, I said fact, is that the correction when Trump and Musk were talking online was greater than the news of Israel bombing Iran. That's this little correction here. And we're talking more about that in this week's weekly economic report. A link to this is in the video description. You can check that out. Sign up now, absolutely free. We're going through Bitcoin, the real estate cycle, of course, some altcoins, and more on the real estate cycle and how this is all playing out towards the peak. So the fact is, people were more concerned with what Trump and Musk were tweeting about than they were about this bomb here. And we have that as a fact now, because Bitcoin continued to rise. We hit 109. We've got this correction going on at the moment. So on those little news pieces that cause the volatility in the short term, but they don't necessarily change the overall macro trend. And that's the theory that I've been following in terms of our cycle analysis, which you guys may also be following as well. Clearly, $5,600 to the downside with Trump-Musk feud, and for Israel-Iran, which started roughly around this point here, was about $2,500, $2,900. So it was about half the amount in terms of BTC correction. And for the S&P 500, the S&P 500 actually shot up nearly 2% last night. Friday, you had the drop, Middle East conflict. Today, market shoots up. Opening hours right now, we've got a slight correction here, but we haven't got the Tuesday data yet because, well, of course, it hasn't opened yet. But for the S&P 500, this is also tracking relatively well with our 5-year cycle. That's what this red line is in the background. This is basically the correction or the crash, the COVID crash, and then the recovery after COVID. And we've seen something as, I guess, dramatic for the times, which was the Trump tariffs debacle, the on-again, off-again taco trades of Trump bringing in tariffs, chickening out again, and the market continues to climb up from that point. Even this Middle East war has done, for now, maybe it does something a little bit more later. We'll wait and see, of course. But for the announcement where the volatility usually kicks in, it was jack all. As I often say, it was a nothing burger. The price went higher yesterday, closed higher, new fresh high for the last 5 or so months, 4 or 5 months, a nothing burger. We've had Middle East conflicts for the last, well, forever really, but for the last few years. You can see them happening here in April 24. We had a correction and then basically ran up higher again. And the Japanese yen carry trade was actually a more severe correction than the Middle East conflict. That back in April, and then you also had the other Middle East conflict again. This was Iran bombing Gaza or Palestine. Something's always going on over there, and the corrections got less and less, which is pretty crazy to see today, which was basically a 1 day, was it 2 days? A 2-day correction for Israel bombing Iran. Total of 2.4% for those 2 days, but of course, just for the day itself was less than that. So for the short term, it really hasn't affected the overall macro cycle here. This is still, well, Bitcoin is still underneath the long-term resistance, which also correlates to the USDT charts I'll show you in just a sec. But so that you can see the difference between the short term and the long term, well, you can see the market continuing to grind, continuing at this stage to consolidate above around 100, 102, above those levels, that is, currently sitting in that 106 level. And if I throw on the Hopium indicators here, we'll throw all three on. We're looking at extensions of previous moves within this bull market and the consolidation that's happening at the moment on this medium-term extension. 104,400, that was the 50% level. That's this range right here that you can see on the chart. I'm shaking it around for you. That extension then runs out to about 130s, in the mid 130s. That also lines up with the shorter term move so far. Should this go down again, I'll reset this, of course. But that also runs up into the mid 130s, and the overall, well, the first major leg out that happened from the cycle low to the March top, correcting off the August low, which we have hit dead on to the 100%, corrected onto the 50%, and should this extend out, we get it up to the 150% level. That too is sitting in the mid 130,000 level. So the benefit to these prices coming in is that you are seeing a cluster come together. Once it gets there, that's the tricky point, because a lot of people think it could just slice through and we keep going and boom. But generally when you get to these extension levels, it will need some more time to rest, consolidate, and if there is still further legs to go in the bull market, that's when we can throw a little bit more hopium on the cake here, whatever we're eating, steak, and we start to see things go even higher. The next targets, and I'm not going to get too excited here because we're still at 106, but looking at the targets, roughly the mid 160s. More on that later because we have further to get to. Things start to evolve over time, but that's the levels that we're currently seeing using the 3 significant extensions that the market has given us, the price ranges here. On top of that, the timeframes to the end are basically still all working out at this stage. As you can remember from, or hopefully you do, on the channel, I was watching March 2024 when a lot of people were talking about this being the end of the cycle, March 24. We were still of the view that we've got further to go and this was going to be a right translated cycle, which is what has happened. I think there is still further to go. We've got a couple of timeframes that we're watching to get to the end. The most simple ones are, of course, using the 4-year cycle, so roughly 3 years up. That takes us out 150, 160 odd weeks into quarter 3. So quarter 3, I think, is going to be an interesting time to watch in terms of any sort of rejections. If we get to those price targets that I just talked about, does that happen for Bitcoin as well in that time frame? If so, we might need a little more time to correct. Otherwise, we look out to those next targets are around October, November, which is that traditional 3-year from low to high top, and then some sort of correction. And just to throw another theory in the works here for you guys playing at home that have got your plans, you're solid, you're serious investors, and you understand how this is working, great. For anyone else that's watching and you're still sort of getting the hang of it, maybe you're just into Bitcoin now, pay attention. We're watching this in case we get a 3-year run up, a shorter correction, and then a left translated cycle after that significant correction. It's something else that could play out here in 26 and 27. So to finish off this theory here, this could correct into some sort of mid 2026 low point. So that could be quarter 2, quarter 3, and then we start to rally into the end of 26, maybe early 27, which would put in a left translated cycle because that would rally and hit a new high for the first half of the next 4-year cycle. So there is the top, and then you would spend a multi-year bear market coming down in price, which also coincides with the 18-year cycle as well. So maybe we've got some nice big blow-off move here, something that might shock a lot of people. That's why I'm keeping it in the back of my mind, is that we have a shorter correction. And by shorter, I mean shorter than the typical 12 to 14 month bear market that most Bitcoiners have gotten used to. And then we have this nice rally up that takes maybe 6 months, maybe it does go 12 months, but it's less than the 3 years. And it's on the left translated, the left hand of the 4-year cycle, which means it has to be less than 2 years from the low, wherever that low comes in. So as you can see, there are several moving parts. That's what happens when you're looking out multiple years. No one gives you the exact roadmap and says, bam, this is where you buy and sell. You've just got to play with what the market is giving you. So a couple of options there. I'm interested to see if this one actually plays out through 2026 into maybe even early 2027. Now, one reason that it could play out into that I guess, blow off top that we've all been looking out for is maybe due to the Elliott wave, where we're potentially in this wave 3 of 3. The third waves are typically the biggest, so they're the ones that move up the hardest and the fastest. Case in point, there is your yellow 3 right here. That was a very, very strong move. And should we see ourselves in that right now, so we've got a shorter term 3 in a much larger 3, that could give us that extra explosive move to much higher prices within 2025, maybe into that 2026 period before a correction. and then one final big pump in the end. But that final pump doesn't necessarily have to be as big as pump 3. So if we do get this, well, then this pump 3 period is probably going to be the largest of them. And whatever we get into pump 5, it's going to be some icing on the cake, maybe an extra opportunity to get out while it suckers all the late comers in for the absolute top of the top of the top. The USDT dominance may also be suggesting this. You might have seen me talk about this for months on end now, and every time it has basically been working out to a T that the support line continues to hold up the rest of the market. The white horizontal lines that I have here, let's turn this Bitcoin off so it's not as confusing for anyone. The white horizontal support lines are basically areas where the USDT dominance has broken down and Bitcoin and cryptos have gone on a significant run. So now I'll turn this back on and you can see you got the breakdown here. Bitcoin's gone on a run. We know altcoins did go on a small run. Now there was a much more significant run in Q4 of 2023 and then into early part of 24. That was this dump for USDT, and Bitcoin was absolutely going parabolic here. Huge move from $25K to $74,000. USDT dominance came back. That slowed the market. The dominance broke down again. Bitcoin took off. And same thing. Again, Bitcoin corrected, USDT dominance is up. Now we are getting into a very, very tight trading range, pretty much between your 3.74-ish% and about 6%. Currently sitting at 4.7%, underneath the 50%, but above the all-time support line, which is called, well, started from the all-time highs of 2017 and 2021, and then began to call each of the crypto and Bitcoin tops, bar this one here, which is why I'm still on the side of us getting a much bigger move, and probably why I keep talking about blow-off tops for BTC in particular. But if this breaks down here, you're 3.7, 4-ish%, the low at the moment is 3.7, that is going to be quite a significant move. And I can't see how it wouldn't also affect altcoins, where you get that big explosive move for altcoins. Shorter term, it's basically still very much in a rock and a hard place. But just to give that hopium to the altcoin holders here, this is your total 3 market cap, still barely hanging on by a thread here above 800 billion, closes above 910 to 960 is basically where things will start getting a little bit more interesting for altcoins. Okay, I'll come back to altcoins in just a sec, but because we got the interest rate announcements this week and a day and 17 hours to go, it's all but baked into the cake that there is not going to be any interest rate cut, and for July, probably no interest rate cut. And if things get even worse for the bonds continuing to at least stall or go down, and the yields continuing to stall or rise, you're probably not going to see any cuts for the remainder of the year either, even though the market is, well, the probabilities are saying that it should get at least 2 more cuts within 2025. This is, of course, for the US market. I still think that is highly unlikely based on what we're currently seeing. But if we do see the stock markets continuing to run towards the end of 25, maybe even into 2026, that might ease the pressure on basically Trump having broken the confidence of the US economy with those stock markets continuing to run, and you might see some more money flow back into the bonds, might drop the yields a little bit there and hold things up just for a little bit longer. I did a few days ago going through each of the cycles, how they overlap with each other, and then how I would look to invest into each of them. You can find that video on my channel, but let's bring a few of the charts up to date, looking at the commodities first. As we often do, we look at commodities, a real estate cycle, the economic cycle, and then in the mix there, you can throw in your Bitcoins and other degenerate type of trading assets. Now, gold has continued to hold out here, trading between $32 and $3,500. Is it going to blow up from this point? We'll wait and see. I don't know. I don't claim to know exactly what's happening at this point, but it is in a very strong position above the 50% level of the range from the low to the high, and for the major range as well from 2022 up to the current all-time high. I think there is further upside to go in this cycle for gold. How you play it is entirely up to you. That just means, do you think you're waiting on a pullback? Do you think there's further to go here in the grind? Do you think it's just going to take straight off? From what I've seen in previous cycles, especially at this stage of how late we are in the real estate cycle and the stock market cycle, of course, is that gold has had a very strong move. So that's this strong move right here. It doesn't look like it using the chart with everything in it, but from here you can see just how strong that move is. Corrections, retests, and then basically it needed about 16 months to consolidate before it went on another very significant move from about $700 up to 1900. So, nearly tripling there, double, triple, nearly a triple there. Is it going to do that again? No one knows. There's going to be calls for $10,000 an ounce. There's going to be calls for 20,000 an ounce, just like there were calls for 5,000 an ounce when gold hit its all-time high just a few weeks ago. You can go back and check all the news headlines for yourself. Just type into Google gold headlines, and around mid-April, when gold was hitting 33, 34, 3,500, there was all the headlines about $5,000 an ounce, and here we are coming up to 2 months later, and we're still sitting at roughly the same prices. Doesn't mean it can't go further. It's just that usually when the things get blown up that much, all those headlines come out, everyone's buying at the tops, it needs a bit of time to consolidate. Silver, on the other hand, seems like it's on its verge to be breaking out. And I've talked about this on the channel a few times now. We've got a multi-year bull market, insane blow off top. You got Bitcoin, but I also think silver's potentially part of that as well. You can see here, this was a new 13-year high, taking out the top of October 2012. We're now in June 2025. It's taken that long. That's another interesting point to note. If you plan to trade these long term, you might have to wait decades, years, maybe even over a decade to get back anything if you're buying at the wrong time. Buying at the wrong time is when everyone else is talking about it and the thing is blowing up from $20 an ounce to $50 an ounce and then all the way back down. Here is the fractal of that period when the thing blew up from 2008 to 2011. We can draw it, put it anywhere on this rough area here, just to give you a bit of a hopium guide. Not saying that this is exactly what's going to play out, but in terms of the grind and the consolidation and then the pump, there is the possibility of much further upside. Not sure about this one. That's what's happened in the past. If we just run with each of the price targets to begin with, see how the market reacts, and then take things a little bit more conservatively. But if we do get these lovely, big, strong moves, that's when you've got to be a little bit more concerned. Hang on for the ride is basically all you can do when the market is going absolutely ballistic at those particular points. So that's my blow off top talk about silver. And I guess it's some sort of degeneracy, if you will. Let's use that as a segue into more degeneracy. Crypto group Tron and more altcoins we'll talk about to go public after US pauses probe into billionaire founder. So Justin Sun is the founder of Tron. He was getting probed by the SEC. Now the US has said no, and looks like he wants to go public on the NASDAQ with Tron is what we are assuming here. But look at the price of Tron on the news. Massive move higher, massive dump down. I'm on Tron versus BTC, mind you. So this is the value of Tron versus Bitcoin, and Bitcoin is still stronger here. That was a very, very high volume day, pretty similar to these days where it came down into the low here. So keep that in mind as well. If this happens to hold out here, that might have washed out some of the weak hands that were selling off into the news. So a news sell event. But then if this is able to continue to hold here at around 240 odd Satoshis, these current lows, that could be a good strong position for it to continue to climb, which Tron has done for, well, basically this entire bull market versus BTC. And Tron versus USD is also just holding out here. It's tested the highs again, fallen back under the 50% level. So if you start to see this thing break down from, look at this clean line right across here, around 26 cents, that would be one of your first or early warning signs that maybe Tron has seen its day. So we've got a huge news event, huge bar to the upside, huge volume on Binance, much bigger than anything we've seen since the lows here, or since this correction here in January, and it closed under this short-term 50%. So the invalidation, super clear, underneath 26 cents. If this holds, that could be much, much stronger things for Tron. Ethereum also had a pretty big move, well, an okay move to the upside all the way back down, basically closed where it opened, still underneath the 50% of 2,750 today. However, just trying to climb higher day by day. ETH BTC still holding up. So basically this huge long 1 month, 5-week grind between support and resistance. Same deal with ETH USD. And for XRP, Sol, and Sui, pretty similar levels. XRP still holding above 50%, barely hanging on here. Sui BTC continues to slowly grind lower, and Sol BTC, same sort of deal, slowly grind lower against their USD values, just holding the line, really looking a little bit sick there. So they need something to come back relatively quickly, push past the resistance, consolidate on those first resistance levels, above those resistance levels, and that could put them in a good position once, and of course this is my opinion, once Bitcoin is finished doing what it needs to do and it can start to break higher. And I'll end on this nice hopium move here. A break of this resistance level, that is going to send things absolutely wild. That lines up with something like this, some sort of crazy scenario that we could see some big prices for BTC. When I talk big, I'm not talking Cathie Wood big of 1.5 million. I'm not talking Michael Saylor big of 1 million. That would literally be squeezing this chart up like an absolute, I don't know. Anyway, squishing it up like that. And yeah, it's not my type of call there. It's not my type of signal. I'm talking something ridiculous like between 200,000 and 300,000. That could be crazy, right? At the moment, I'm still sitting in those conservative figures of around $130,000 to $160,000. Let's see how things go from that point. Either way, I think everyone's going to be pretty excited if that does happen. And we would also see the USDT, where's my damn chart? USDT dominance break down from that 3.7%. Like, subscribe. The report is coming out today. Link in the top of the video description. And I'll see you guys back in the next video. Thanks again. Peace out.